We're going to talk about a little bit about oil, right? I mean, and where are oil prices headed from here? Last 2 days, there's a 6% drop. But of course, I mean, before that, counter to expectations, oil prices went headed higher. So that's basically been reversed in the last two sessions. Marko Papic is chief strategist at BCA Research. We also have MK Surana, former CMD at HPCL. So for our viewers, Marko, of course, believes that oil prices, and maybe I don't know if he's changed his view and we'll ask him, his view has been that oil prices are actually headed higher, counter to market expectations. And I mean, they did head higher. And Mr. Surana, of course, is going to weigh in on how oil marketing companies, standalone refiners, etc., are placed in this environment. Marko, let's start with you at a basic level. Look, I mean, the markets, of course, believing for now that there is no direct action in Iran, so the geopolitics there seemingly calming down. Would you agree with it? Or, and of course, what does it mean for oil in that sense?
Well, I think that, first of all, the setup before the action in Venezuela was quite bearish, with a lot of floating storage available around the world, actually the highest it's been since COVID. So most traders were positioned quite bearish. And then the narrative, as Venezuela was unraveling, was that the United States of America would be able to release more supply. I think that that's overdone. It's not going to happen very quickly. And then the risk was applied to Iran that President Trump would do something similar. He did say yesterday that he would not. He seems to be softening his stance. And there are reports today that he has been talked out of it by many Gulf allies, UAE and Saudi Arabia. My concern, however, this is out of his hands. There's a development in Iran that's not controlled by the U.S. It has a life of its own. Iran is undergoing very significant protest, and those protests could get out of hand, and eventually they could cause domestic political chaos that's really uncontrollable. So I still think that from a geopolitical perspective, there is upside risk to oil prices over the next month or so.
Upside risk, right? I mean, so that doesn't go away in that sense. Mr. Surana, here, PSU oil investors have been wondering what's going on. I mean, oil prices largely have been in a range. I mean, Brent, for example, between 60, 65 for a while. I think product cracks, etc., have been very strong, and they've been all wondering why are oil marketing companies trading the way they are, or if the standalone refiners, etc., even private companies like Reliance, etc. As someone who's run one of the largest OMCs in the country, what's your perspective, sir? How should investors view this environment?
Good morning, and good morning to Marko as well. So as he rightly said, earlier the oil was bearish, and everybody was assuming that it will somewhere between 55 to 60. After Venezuela, there was not much move because that didn't impact the market much. After the Iran thing, there are two things which are happening. Initial very hard stand which was taken, and yesterday's softening has changed the risk premium which the market is putting, and that's why in last 2 days you have almost 6% drop. So there is one more reason that Iran is not as easy as Venezuela, because they've got better military capabilities, they have better air defense system, and second thing is they're more determined regime as well. And therefore, any military intervention from Iran may face with certain repercussions. And one of the things can be the strikes by Iran on the U.S. military bases, which are there in the oil-producing countries. And therefore, what the market is probably factoring in is that if the conflict zone increases, and in that case, there may be disturbance in the oil supply from the West Asia, and that may lead to more war premium, and that is what the thing is. But at the same time, many of the Arab countries and Turkey and many of the oil-producing countries have been canvassing for no attack because they would not like their trade to be disturbed in the West Asia. The Straits of Hormuz is also one of the critical points in this whole thing. And therefore, I think the softening of the stand where the possibility of an immediate attack is, I think, receded. There may be some escalation, which is also seen in terms of yesterday. There are some more sanction against some of the shipping lines. But I still feel that an immediate attack on Iran is probably receded, the threats of that, or a full-fledged attack is receded. I also believe that US might be thinking of having a quick and decisive action like Venezuela, which is unlikely in case of Iran. And I think that will weigh against an full-fledged attack on Iran. And therefore, I would assume that the market will factor in and the oil prices, while there is a risk, upside risk of if in anything happens, but otherwise it will remain below 65 zone. And as far as the Indian companies are concerned, as well as the investors are concerned, the marketing margins are good, the refining margins are good, the volumes have been good, the marketing volumes are good. And therefore, I think the oil companies in India are well placed.
Yeah. Yeah. Marko, you said the protests could get out of hand, right, in Iran. After the revolution in Iran, which is 78, oil prices more than doubled. But we're not in that same kind of situation, right? Because Iran's oil production is about 2 million barrels per day below the pre-revolution level. So it's not as if, there is a great amount of Iranian oil in the market which is going to likely be curtailed. So just in terms, if that statement what you made, which is that protests may get out of hand, comes true, is there going to be with or without direct action from the US, would it have a noticeable impact on prices? What's your sense?
It could. The decision tree is starting to grow branches, if you know what I mean. There are more and more potential outcomes that we just can't forecast. Iran currently is exhibiting some really worrying signs. For the first time since the revolution, we have the Iranian military actually taking pretty decisive actions domestically against the IRGC, at least in the political sense. So the National Security Council now has more seats awarded to the Iranian military rather than to the powerful IRGC, which is linked to the supreme leader. And we're starting to see real sinews of the political system come under strain, and that could lead to significant disturbances, maybe even something that we would call a civil war. This is a place that, once the regime starts to face real pressure, it's very difficult to forecast the way that goes. So that, yes, even that 2 million barrels could come offline. It could be put in doubt. You could have different fractions within Iran fighting against each other in various other external ways, whether it's taking action against shipping in the Strait of Hormuz, and so on and so on. So I think that we've entered a very dangerous phase. And so I think if you were to net out the geopolitical risks and positives, a change of regime in Venezuela towards a more conciliatory one pales in comparison to the uncertainty emanating out of Iran. I would argue that there's another issue. We started the year off with a very bearish sentiment in the trader community. We also started off the year with assumption that oil would stay low. However, the very macro context that we're enjoying today is a product of political decisions taken in Riyadh almost exclusively. It's the very high level of OPEC production. But one thing that nobody seems to be talking about is that the high level of OPEC production and the quotas that they have set, really kind of flies in the face of some of Saudi domestic priorities. The Vision 2030 is not going to finance itself. Saudi Arabia is facing a current account deficit, and it's having to basically enter the international bond market very aggressively and to tap its foreign currency reserves. So I do think that we're running out of time in terms of these low oil prices. I think at some point, OPEC itself, namely Saudi Arabia, is going to also start thinking about whether these prices are too low for their domestic fiscal priorities.
Yeah, but you got President Trump on the other side, right? Keep oil low. That's one of the top priorities for him. So we'll let us see, who has the upper hand. How it's going to be managed. Maybe more oil from places like Venezuela. But as you said, that's going to take time. I have more questions, but we're completely out of time here. Mrs. Surana, thank you very much for joining us. Marko, thank you very much for coming back on again. And I think this is a conversation we will keep having as things unfold on the geopolitical front, even though at this point in time, direct action in Iran from the US looks, at least the probability seems to have moved down over the last 2 odd